Please come to IAS 20. IAS 20 is accounting for government grants and disclosure of government assistance. So this standard is applicable in very special situations where an entity receives government grants. Why entity receives government grant? Because they comply with certain conditions. In order to promote industries in some backward area, the government may give grant, either in the form of, say, land free of cost, or the land may be provided at concessional rate, or they may provide some plant or equipment, or they may give you cash subsidy with respect to those plant and equipment that you purchase. Sometimes they may give you grant to carry out some activities, like for example, welfare activities for children. You may have to distribute books and other educational material to students. For pollution control purpose, in some cases they give grant so that you can install solar equipments to conserve the environment. They can give grant for electrical vehicle instead of diesel and petrol based vehicles. They can give grant for medical assistance. Okay. So the question is, what is the accounting treatment of grant received? Here we receive from the government, but we don't have to pay anything in return. So the question is, what to do with those grant received? Should it be directly taken to the statement of financial position, or should it be directly taken to statement of profit and loss, or should we defer it and then recognize it on some systematic basis? Right. So this standard will talk about various types of government grant that we will receive: monetary grant, non-monetary grant, received at free of cost, received at concessional price, received after you have complied with the conditions. Sometimes just to help a particular industry, the government may give you the grant. And then the standard also talks about the accounting treatment of refund of grant. What accounting treatment will you give when for some reason you may have to refund the grant? And the standard also talks about disclosure of government assistance. Suppose because of the government the entity has got any benefit, then you have to disclose what kind of assistance you have received. Okay. So this is only for disclosure purpose, so that the users of financial statement should know that the entity's business has been influenced to certain extent because of the government assistance also. So for government assistance, you are going to give the disclosures. Okay. This standard is applicable for accounting treatment of government grant, and then the standard also requires disclosures relating to government grant and any other form of government assistance from which the entity has benefited. If the assistance is given to general public at large, is that required to be disclosed? No. Suppose government construct airport, everybody is benefited. I need not disclose in my financial statement. Government construct a road in that city where my plant is located. That disclosure I don't have to give. But other assistance which the government may provide you, like marketing knowledge, technical knowledge, okay, some form of guarantee, then those assistance will be required to be disclosed. Okay. So paragraph number 2 deals with the definitions, and we are going to use these definitions in solving the remaining part of this chapter. What is government? Government refers to government. Okay, government means government. Government agencies also. So government has many welfare agencies, government departments are there which provide such kind of assistance. Then similar bodies, they have said similar bodies, whether local, national or international. So that means the government can be local government in your city or district. It can be a state level government, national level government, or it can be even an international body from which you can receive the grant. So grant may be received from, say, United Nations organizations, UNO. Apply this standard. World Health Organization. Apply this standard. These are similar international bodies. What is government assistance? Government assistance is the action taken by the government designed to provide an economic benefit specific to an entity or a range of entities qualifying under certain criteria. So government assistance in this chapter should give economic benefit to either that particular entity for which we are preparing the financial statement, or a range of entity, a certain categories of entities which qualify under certain criteria. Then that kind of disclosure would be required. It does not include benefits provided only indirectly through action affecting the general trading condition. So general support given by government will not be covered by this standard. For example, provision of infrastructural development, road, airport, port, will not be discussed in respective company's financial statement. It is general in nature. Or the imposition of trading constraints on the competitors. So if there is a ban on the Chinese product, it will affect our business positively in case if we are competing with that Chinese product. Will it be shown as a government assistance? No, because it is affecting general trading condition. Now next is very important. What are government grants? What are government grants? Government grants are assistance by the government in the form of transfer of resources to an entity. First point is it must result into transfer of resource from the entity. Second is it must be in return for past or future compliance with certain conditions. Government grant doesn't come free of cost. There must be certain conditions. Either you have fulfilled it, then you obtain the grant, or the grant is given first and then you have to fulfill the conditions relating to the operating activities of the enterprise. What is excluded from the government assistance? Which cannot have a value placed upon them. What is not included in government grant? Government may give you some assistance, but it cannot have a monetary value. Example also I have given: free technical or marketing advice and the provision of guarantees. This you will disclose if it is given to a particular entity or a range of entities. Okay, but this will not be accounted because it cannot have a monetary value placed upon it. Second, normal trading transaction with the government is not a government assistance. Normal trading transaction is not a government assistance. If government places order for clothes for military and you charge them the market price, normal trading, normal accounting will be done. One more example they have given in the standard: government procurement policy that is responsible for a portion of the entity sale. Now this also cannot be distinguished from the normal trading transaction. So government in general has announced a procurement policy. We are going to procure only from local businessmen. Now in that case you also got benefit, but you can't really make out of this total sales that you have made, what portion of it is because of this government procurement policy. This will not be accounted under this standard. Now in this chapter, government grant will be divided into two categories: grant relating to asset and grant relating to income for accounting purpose. So what do you mean by grant relating to asset? Grant relating to asset means whose primary condition is that, main condition is the entity qualifying for them should purchase the asset, construct the asset, or otherwise acquire long-term asset. So the company which is qualifying for this grant should purchase, construct, or acquire. Purchase is allowed, construction is allowed, acquisition is allowed of long-term assets. Is it right? Like for example, land, plant and machinery, license, software, building. These are long-term assets. And subsidiary conditions may also be attached. Subsidiary condition is not compulsory, but they may also be there. For example, you will construct the factory building only in a remote location, backward location, okay, specified location, then you are eligible for the grant. Because the purpose of the government will be the equal distribution of industries, what is called balanced development, regional balance. So they may identify the area where only if you locate your factory, you are eligible. Or sometimes they can put a restriction on the number of months, years you have to use that asset. For example, you have installed solar panel on which you get subsidy, but that solar panel you have to use for at least 10 years. After receiving the subsidy, you should not sell them. Okay. So these are the subsidiary condition which may or may not be imposed, like location, period, etc. What are grant relating to income? Very simple. Those government grant which are other than those related to asset. If one of them is defined, the other one is the balancing figure if there are only two possibilities. Next is forgivable loan. What is forgivable loan? That is, the loan is waived. Loan is first taken and you are not required to pay. Then the standard says such loan will become grant. Because then these are like grant only. You receive only and you are not required to repay. So the standard also deals with forgivable loans, are loans which the lender undertakes to waive repayment of under certain prescribed conditions. Forgivable loan becomes a grant. Forgivable loan will be treated like grant when government forgives the loan granted to the entity. Is it right? So this is very common in a country like India, where many state government, central government, in order to get more popularity among the voters, they promise the loan waiver. A government may declare forgiveness of loan granted by other lenders also, like bank. So government can not only forgive their own loan, they can also forgive the loan of the bank also. So you have taken a loan from bank, government will pay to the bank and bank will waive your loan. That is also a government grant. For example, the loan taken by an entity from a syndicate of bank is paid by the government in public interest. But for that entity whose loan is waived, it is a grant. Next is fair value. Fair value means the price that would be received or received to sell an asset, or the price that would be paid to transfer a liability in an orderly transaction between market participants at the measurement date. That is defined in IFRS 13, fair value measurement, and we will discuss in detail each and every term in IFRS 13. What is market participant, what is orderly transaction, what is measurement date, and from whose point of view this fair value has been defined. So from the definition it has been defined from seller's point of view. Amount that would be received to sell an asset. Anyway, more about fair value in another chapter. Now what is the scope of the standard? Certain transactions, events, even though government may be involved, are not to be discussed under this standard. For example, government assistance in the form of benefit that are available in determining taxable profits like tax holidays, reduced tax rates. This standard is not applicable if under the income tax law an entity is granted 10-year tax holiday. Certain type of entity are supposed to pay only 25% tax instead of 30% tax. Not covered by this standard. Then government participation, the ownership of the entity. If the government is the stakeholder in a company, either as an equity holder, preference shareholder, debenture holder, bond holder, this standard is not going to cover those transactions where the government is participating as owners. Then benefit provided indirectly. Benefit provided indirectly means not to a particular entity or a range of entity, but in general. Like for example, provision of infrastructure for setting up unit in a backward area, general transport and communication network. Government is promoting transport, communication all over the country. You may get benefit from that, right? Like we have also got benefit because of, suppose government allows free Wi-Fi. Students can download the video, enjoy more lecture. Will I show this in my statement of financial position? No. It is not specifically provided to us. Or for imposing restriction on competitors. So if the government bans some import products, raises the import duty, that is going to affect all the industries. When the value of the resources transferred by the government is not reasonably determinable, then such grants are not recognized. For example, free technical or marketing advice and the provision of guarantees. And the next we have already discussed that government transactions which are not differentiable from normal trading transactions. These are the areas where the standard is not applicable. Determination of nature of assistance. Point number 4. Any action by the government that results in economic benefit to an entity or range of entities qualifying under certain criteria will come under the gamut of government assistance. So what will you disclose as government assistance? If it gives economic benefit to a selected entity or a range of entity who qualify under certain criteria, then this will be shown as government assistance. This assistance, when it involves transfer of resources, but suppose government gives you cash, government gives you land, then it will be shown as government grant. When there is no transfer of resources but only some benefit provided to you, then it is assistance. The manner in which the manner in which the grant is received does not affect the accounting method to be adopted. Thus, a grant is accounted in the same manner whether it is received in cash or whether it is a reduction of liability to the government. Either of the two, you are beneficiary. Accounting will be the same. If there is a receipt of cash, cash account debit. If there is a reduction in the liability to the government, liability account debit, what we have to learn, credit will be given to which account and how that account will be further carried forward in our financial statement. The above grants which are not recognized and those government assistance which do not involve transfer of resources are disclosed as other government assistance benefiting the entity. So government grant which are not recognized or those which we recognize as government grant will be disclosed as government assistance. So government assistance will be only disclosed. Now the question is, when should government grant be recognized? So the standard says government grant will be recognized if the two conditions are satisfied. if there is a reasonable assurance, that reasonable means you are more or less certain, at least more than 50% sure, that the entity would comply with the conditions attached to the grant. First is that you must be reasonably sure you'll be able to comply with the conditions attached to the grant, and second, the grant will be received. Second is you are reasonably sure that the grant will be received. If any of the two is not available at the time of accounting, if certainty about any of the two or both are not there at the time of accounting, then do not recognize the grant. Mere receipt does not necessarily mean that the conditions associated with the grant are complied with. Just because government has transferred you the fund, that is not a guarantee that the condition will be complied with. Now one more line they have written, once a government grant is suppose recognized, okay, you have recognized any related contingent liability, suppose any contingency comes later because of change in government, change in law, your own situation may have changed, then that contingent liability will be disclosed as per IAS 37. Okay. Now we'll come to the accounting part. After that basic understanding, for accounting purpose, you have to first put yourself in one of these two boxes, whether it is grant related to income or whether it is grant related to asset, because further accounting will change accordingly. So recognition of grant and subsequent accounting depends on this classification. What do you mean by grant related to asset? Definition paragraph, repeat again. The primary condition is that the entity would purchase, construct or acquire long-term asset, and there can be subsidiary conditions attached. Example of subsidiary condition: location, number of years. Example of the grant related to asset: subsidiary on purchase of plant and machinery by companies belonging to a specific industry. Suppose you are manufacturing electrical cars. Government wants to promote that industry, so they may finance some portion of the plant and machinery. Or suppose you manufacture solar panels, then the government can give you subsidy. What is the treatment? Two options are allowed to you. Which option are allowed to you? Option number 1, you can credit the grant received to deferred income account. Credit the grant received to deferred income account and apportion it to profit and loss on systematic and rational basis over the useful life of the asset. Now what can be the most systematic and rational basis here? Depreciation. Is it right? So on one hand you will charge depreciation, on the other hand you are going to show grant as income. Method 1. Method 2, both are allowed. You have to choose as one of your accounting policies. Some management may choose this policy so that the fixed asset will appear at gross amount. Some management may choose the second policy where the grant received is credited to the asset account. So asset value will come down. The asset value will come down. The depreciation will also fall, and as a result, the depreciation charge will be reduced. Both the method will have same impact on the SOPL. Because in first method, depreciation will be high, but at the same time, there will be other income in the form of government grant. Whereas in the second method, the depreciation charge itself will be low. So, method of presentation of grant related to asset: deferred income method and option 2, deduct from asset value. In deferred income, it will be first deferred and shown in the statement of financial position. Every year, some amount will be transferred from deferred income to statement of profit and loss. Okay. So what are the journal entry you will pass here? When you receive the grant, bank account debit to deferred grant या deferred income account, and then deferred grant proportionate amount transfer every year to SOPL. Okay. Here when you receive the grant, in the second case, bank to property, plant, equipment, or that whatever is that asset, and then your depreciation accounting as usual. What about the presentation in the statement of cash flow? Will you show net amount or gross amount, or you have an option? You don't have an option. In the statement of cash flow, the grant received and the asset purchased will be shown separately. Grant received will be shown as financing activity, and grant related to asset purchase will be shown as investing activity. Okay. So just write down there, if not written, grant received will be shown as financing activity and asset purchase will be shown as investing activity, that I mentioned in that example printed below. See this example, A Limited establishes solar panels to supply solar electricity to its manufacturing plant. The cost of solar panel is 1 crore with a useful life of 10 years. The depreciation is provided on SLM. Government gives 50 lakh rupees as subsidy. The company treated this grant as deferred income. Examine how the government grant can be realized. State how the same will be disclosed in the statement of cash flow. So first thing is that government is giving you grant related to some solar panel which is an asset whose life is 10 years, and the company wants to treat this grant as a deferred income. So first you have to discuss in your answer that this 50 lakh rupees will be treated as deferred income and will be recognized in the SOPL over next 10 years. Since you are following SLM method, your credit to profit and loss will also be equally spread over 10 years. So 50 lakh divided by 10, 5 lakh. Okay. The next question is, what about the statement of cash flow? So this answer underline. 1 crore rupees will be shown as investing activity for purchase of solar panel, and 50 lakh grant received will be shown as inflow under the head financing activities. Okay. Now next is grant related to non-depreciable asset. Grant related to non-depreciable. Example, land. The example which comes to our mind is land. Now in this case, it may also require the fulfillment of certain obligation. Of course, if it requires fulfillment of some obligation, then only you come to this paragraph. Okay. If you have already fulfilled all the obligations, then you will take it to SOPL. So come to this paragraph, if it requires fulfillment of certain obligation, then in that case would then be recognized in profit or loss over the period that bear the cost of meeting the obligations. So then it will be first deferred, and will be recognized in P&L account over the number of years required to meet the obligations. These grants are also recognized. No, this is not applicable. Come to this example directly. A grant of land may be conditional upon the erection of a building on the site, and it may be appropriate to recognize the grant in profit or loss over the life of the building. This example is taken directly from IFRS. Suppose the condition is that you must construct a building on the land. Then in that case, the grant will be recognized over the life of the building. So there is a small summary that we have prepared here. If the grant is related to depreciable asset, then it will be recognized over the useful life of the asset. If you have deferred it, then deferred income will get recognized. If you have credited to the asset account, depreciation charge will be automatically adjusted over the useful life. So whichever method you follow, it gets recognized over the useful life. Non-depreciable asset is recognized over the period in which the obligations are required to be met. Okay. Now we'll solve some question answer. So we have covered right now grant related to asset. Depreciable asset, non-depreciable asset. Okay. For depreciable asset, we had two options. Either you credit deferred income or you credit the asset account. Nishchit Limited acquired a generator on 1/4/2019 for ₹50 lakh. On 2nd April, it applied to IREDA, Indian Renewable Energy Development Authority, for a subsidy of 10% of the cost as the generator was using solar energy. The subsidy was granted in June 19 after the accounts for 18-19 were finalized. The company has not accounted for the subsidy for the year ended 31st March 19. Give your views on the following. How should the subsidy be accounted in the accounting year 1920? Check. Is it a grant relating to asset or is it a grant relating to revenue? Asset. Which asset? Generator. Then the moment you say it is related to asset, then you will say there are two options. First option is you can treat the subsidy as deferred income, allocate over the remaining useful life in the proportion in which depreciation is charged. Then you should also write alternatively, the grant can be shown as a deduction from the gross value of the asset concerned in arriving at its book value. The grant is thus recognized in the profit and loss statement over the useful life of the depreciable asset by way of a reduced depreciation charge. So indirectly the grant gets recognized in P&L account over the useful life. The two methods will have same effect on the SOPL, but in the balance sheet, in the statement of financial position, the amount of your asset will be different. Next is question number 3. A fixed asset was purchased for ₹10 lakh. Government grant received towards it amounted to ₹4 lakh. So the accounting treatment, if it is a depreciable asset with ₹2 lakh residual value and 4 years useful life, the company treated this grant as a deferred income. Company follows SLM. So what will be your entry? First you will receive the grant 4 lakh. You will pass an entry, fill in the blanks. Bank account debit 4 lakh. To deferred government grant 4 lakh written. And then what about the subsequent treatment of this 4 lakh? This grant will be recognized in P&L account over the life of the asset in the proportion of depreciation. Depreciation will be 2 lakh rupees per annum, means equal amount. So even the grant will be equally transferred to profit and loss. Deferred government grant account debit to profit and loss account. One more question we'll try. Have you written 1 there? 1 write down. A company purchased on 1st April 2010 special purpose machinery. Special purpose machinery means it is a grant related to asset for rupees 1 crore and received central government subsidy for 25% of the price. Effective life of the machine is 8 years. Now here they are asking you explain the accounting treatment. So you have to write 2 answers. Same 2 answer. First you can write that you will treat the grant as deferred income and recognize in profit and loss account on some systematic and rational basis over the useful life of the asset, which is the depreciation. And second, you can write alternatively, the grant will be shown as a deduction from the gross value of the asset and the reduced book value will be depreciated over useful life. Okay. Now we'll take one more question, number 5. X Limited set up a factory in a backward area. Make it X Limited. X Limited set up a factory in a backward area and purchased plant for 500 lakh for this purpose. Purchases are entitled for CIMA credit. Means this is the tax which is refundable. Refundable tax. So you have learnt in IAS 16, duties and taxes which are refundable will be excluded. And also government agreed to extend 25% subsidy for backward area. The company treated this grant as a deferred income. What is the accounting policy they have decided? Deferred income. Determine the depreciable value of the asset. So be careful. If you are going to treat the grant as a deferred income, then what will be your answer? Depreciable amount will be only cost minus CIMA. Write there in pencil. 500 is the cost, 10 is the CIMA, 490. And then you will write a note. The grant has to be recognized in P&L account over the life of the asset in the proportion to depreciation. Okay. Okay, now we'll come to grant related to income. What is the meaning of grant related to income? If a grant is not related to asset, then it is a grant related to income. For example, the grant may be given for some welfare activities, like you may have to distribute medicine, you may have to distribute study material, or the grant may be for providing some welfare to the employees. Grant may be given in case if you employ certain number of employees from the local area. So such grant will come under grant related to income. And how are you going to recognize it? Grant related to income are to be recognized in the profit and loss over the period on a systematic basis to match the related cost which they are intended to compensate. Because government is not going to give you grant for without any reason. You also have to incur some expenses. For example, you have to distribute the books. Government gives you the grant. You will distribute the medicine, food. Government gives you the grant. So you will apportion the grant. You will apportion the grant in the ratio of the cost which they intend to compensate. Like for example, you received 300 million grant and you are going to spend this over 3 years. You think that your expenditure incurred will be 200, 100, 50, or let us say 100. Easy for calculation. So how much grant you will recognize in P&L account? Grant to be recognized will be in the ratio of 2:1:1. So 2 by 4 into 300 is 150. Then 1 by 4 into 300, 75. 75. This way the grant will be recognized. Okay. Grant can be presented. Now what is the presentation requirement? So this is my statement of profit and loss. How am I supposed to prepare this grant? Now there are two alternatives. One alternative is you will show it under other income. Okay. So grant that you have recognized in our example 75 in the third year, and in the expenses you will write whatever relevant expense you have incurred, for example 100. So income will be shown separately, expense will be shown separately. The other accounting suggested is how much expenses you have incurred? 100. Out of that 100, 75 was provided by the government. So what is the net expenditure you have incurred? 25. Which method is allowed by the standard? Both methods are allowed. Whichever method you follow, you will disclose it. Disclose the method of presentation in the notes. Both are allowed because there are two sets of argument. One set of argument is this is better because here we show expenses incurred, so that expense of one enterprise can be compared with expense of other enterprise. This method shows that out of 175 has been compensated by the government. What you have incurred? 25 only. So because both the arguments are strong, the standard has allowed both the methods. Okay, so I have made a small diagram for this. One method of presentation is show it as an income in under the heading other income in SOPL. The other presentation is deduction from related expense, and both are allowed. Whatever you do, write a note for that. So first we'll just discuss a small question on the screen, which is question number 7 on the next page. Explain the treatment of the following. Rupees 25 lakh received from local authority for providing medical facilities to the employees. Now first check whether it is grant related to asset or not. So it's not grant related to asset, revenue grant. Okay, grant in the nature of income. Now this question is not clear. In how many years this medical facilities will be provided to the employees? So what will you write? That if the medical facilities are yet to be provided, then you defer the grant and allocate in the ratio of expenditure you are likely to incur on the medical facilities to the employees. Okay. Then come to next accounting treatment, para 12, previous page. Government grant that are receivable as a compensation for expense or loss. Government grant that are receivable as a compensation for expense or loss. Now you may have provided some services in the past. Now you received the grant. So this is a compensation. Sometimes the government may ask you that you sell the product below the cost to promote such product. Like for example, in India, khadi products, to promote khadi. Okay. They sell it below the cost. So what government does? Government gives them grant for this purpose. So this grant will be recognized in the profit and loss in the period in which they become receivable. Underline. So no deferment of this item. But you must ensure that the grant has become receivable. If the grant has become receivable, then it will be fully recognized in profit and loss. So government grant that are receivable as compensation for expense or losses that were incurred. So it is for compensation for any expense in the past. It is to compensate you for any loss or for purpose of giving immediate financial support. Compensation for expense, compensation for loss, or for immediate financial support. If this is the purpose of government grant, then they will be recognized in the statement of profit and loss fully in the year in which they become receivable. Example, subsidy for purchase of products of medium, small and micro enterprise, which is comparatively costlier than the market price of comparable products available from other sources. So very good example. Sometimes some government departments will be asked, or some private company may also be asked to buy products from this industry, even though you can buy it from large industries at a lower price. So government says, don't worry, we will compensate you for the loss. So this will help in growth of medium, small and micro enterprise. So this is a compensation for losses. Subsidy for selling goods at government determined price. This is to the seller. First one is to the buyer. And one more example I have added in your notes. Expenses incurred on environmental protection by way of cleaning up and land filling as per the government scheme. So you have incurred this expenditure. Then you receive the grant. Credit to income statement fully when the grant becomes receivable. Now, there is a question. Search for this question. The same question. ASF Limited receives grant of rupees, question 6 below, 10 million as compensation for expenses incurred on environmental protection by way of cleaning up and land filling as per government scheme. The terms and the condition of the grant include release of grant only when specified activities are performed and evaluated by the government authority. During 15-16, in your notes 2021, the company performed the specified activities and received the grant. So when did you receive the grant? After you have performed the activity and it is certified by the government officers. Company spent 13 million on environmental protection, plantation, etc. How should the entity recognize the grant? So what will be your answer? Entire 10 million rupees will be recognized in the statement of profit and loss. Okay. And there are two ways you can do the presentation. One is you can show it as an other income, and the second is you can show the net of expense if you have incurred expenditure in the same year. One more question. This we have covered. Non-monetary grant now. What is a non-monetary grant? Non-monetary grant. In the previous example, government was giving you grant in the form of cash. Non-monetary grant. Grant is given in the form of an asset. Example, land, factory building, plant and machinery. Okay. It can be an intangible asset also, like license, quota, permit, software. Okay. There are two ways you can account for this non-monetary grant. One, either at fair value. Second, nominal value. Fair value means at market value. So even though you may have paid less than the market value, the grant will be recognized at fair value. The asset will be recognized at fair value. Or sometime you may recognize it at nominal value only. This nominal value means just some amount to bring the asset in the books. Land may be given to you free of cost. You can recognize it at 100 rupees. Okay. Land account debit to grant account 100 rupees. And then grant will be transferred to statement of profit and loss. So both methods are allowed. Fair value method also, concessional rate also. Now loans at concessional rate. Is it also a grant? Yes. If it is below the market rate of interest. The two standards will apply now. If the loan is given below market rate of interest, it will be treated as government grant and the loan will be recognized and measured as per IFRS 9, financial instrument. How are you going to recognize the loan? You know it. You will first calculate the future cash flow. Suppose this is a 4-year loan. What are the cash flows this loan will generate? Actual cash flow. Compute present value at market rate of discount. Compute present value at market rate. Okay, compare this with the actual loan given. This is the present value of the loan. This is actual loan. The difference will be treated as government grant. Suppose this is B, this is A. A minus B will be the government grant. Okay. The benefit of below market rate of interest shall be measured as the difference between the initial carrying amount of the loan, which means A, determined in accordance with IFRS 9. Sorry, this means B, and the proceed received, that is A. So if A is greater than B, the difference is the government loan. Okay. The benefit will be accounted in accordance with this standard. The benefit will be accounted in accordance with this standard. The benefit will be accounted in accordance with this standard. Now, benefit depends on what is the purpose of the loan. If it is related to asset, because that grant becomes now a grant, so you have to see the purpose. Asset related grant, to apportion it over the life of the asset in the ratio of depreciation. If it is in not asset related, revenue related, then over a number of years in the ratio of cost. If it is to compensate for any expense, loss or benefit to the entity, then entirely will be recognized immediately. So the entity shall consider the conditions and obligations that have been or must be met when identifying the cause for which the benefit of the loan is intended to compensate. Okay. Now, in order to understand this concept, we have drawn one question. You have to solve in the book only. Question number 8. X Limited has been granted a 4% government loan amounting to rupees 100 lakh for establishing manufacturing facilities in designated backward region. The loan is for a period of 4 years. The principal shall be repaid in 4 equal annual installment. What is principal? 100 lakh divided by 4. So every year 25 lakh rupees will be repaid plus interest at 4%. So your cash flow will be 25 lakh plus 4% on opening balance. Market rate of interest is 10%. So that will use as a discount rate. Measure the government grant and show how would the grant be recognized in the profit and loss. So first we'll learn how to calculate the grant. So write down in small font. Step 1. Calculation of present value of loan at market rate of interest. Calculation of present value of loan at market rate of interest. Draw this table. First column write year, loan outstanding. Third, loan repayment. Cash interest at 4%. Cash interest at 4% on loan outstanding. 4% of this figure, loan outstanding. Total cash flow and present value at the rate of 10%. One I will show you. 100 is the loan outstanding in the first year to start with. 25 loan repayment. On 100 you will receive 4 or pay 4. So total cash flow is 29. 29 divided by 1.10. 29 divided by 1.10. 26.36 approximately. Now try year 2. In year 2 your opening loan outstanding will be 75. 100 minus 25. 75. Repayment always 25. Interest on 75 at 4%. 3. Cash flow 28. Divide by 1.10. 2 times equal to. Press equal to 2 times. 23.14. Right? Try third year. Anybody third year, last figure. Use small font. We have to write a lot. Third year answer is 17.76. Yes or no? Yes. Fourth year. Third year is 20.29. Fourth year is 17.76. Take total of the last column. 87.55. So if you look at the market rate of interest, substance over form, you are actually getting a loan at 87.55. But the actual cash transfer in your account will be 100. What about this difference of 100 minus 87.55? That is treated as government grant. Up to this you have written. Below this write down. Step 2. Government grant is equal to. Write in a small font. I need some more space. Government grant is equal to loan minus fair value of loan. Loan is 100, fair value of loan is 87.55. So that is 12.45. 12.45. Step 3 write down. Accounting for loan at amortized cost and deferred grant. Accounting for loan at amortized cost and deferred grant. And deferred grant. Now draw this table first. Now there are different ways you can recognize the deferred grant. This is one way, not the only way. Okay. In this method, what we'll do, the difference between the interest that we are recognizing and the interest we are actually paying is our gain, and that is recognized in profit and loss account. So write down year amortized cost at the beginning. We will learn more about this amortized cost in IFRS 9. Don't worry, first you write down today. All the standards are interlinked. Okay, to understand one standard, some knowledge of other may be required. Then interest recognized at 10%. Cash interest. This is what you are actually incurring, but outflow is only 4. So the difference is your benefit, which is last column. Loan repayment, amortized cost at the end, and recognition of grant in the profit or loss. Column number, right? This is column number 1, 2, 3, 4, 5. 6 equal to 2 plus 3. Minus 4 minus 5. This is my opening balance. This interest accrued will add. So 2 plus 3. And payments made will reduce. So minus 4 minus 5. And how much grant will be recognized in the profit and loss? Difference between 3 and 4. First year I will help you. Start with 87.55. Take 10%. 8.755. Cash interest 4. Loan repayment 25. $67.305. 4.755. Okay. What will be the opening balance now in the second year? This figure 67.305. Take 10%. 6.731. Cash interest previous working note 3. Loan repayment previous working note 25. Check the third year. What is the answer for third year? 2.604. 2.604. Some difference in decimals is okay. Anybody? Fourth year. Fourth year. Check the answer. Is it 1.36 approximately? Check the total of the last column. Is it matching with the government grant figure? Total of this last column. How much? Around 12.45. This is equal to your government grant. This way it will get recognized. Right. Now come to one more example which is not printed, you have to write. Or first check if it is printed, you don't have to write. Is it there or no? No. Okay. So write down, it's a small question only. During the financial year 2015-16, during the financial year 2015-16, X Limited got a loan waiver. X Limited got a loan waiver amounting 30% of its term loan. Amounting 30% of its term loan. The term loan amounting to rupees 100 lakh. The term loan amounting to rupees 100 lakh was taken on 1/4/2012 Note down the question first. The term loan amounting to rupees 100 lakh was taken on 1/4/12 from a scheduled bank, and amortized cost of which is also rupees 100 lakh. Under the loan waiver scheme, the government will pay the amount directly to the bank. The government will pay the amount directly to the bank. Briefly discuss the accounting policy to be adopted. Briefly discuss the accounting policy to be adopted by the company as regards the forgivable loan, and show necessary accounting entries. So write down the forgivable loan. The forgivable loan is a kind of immediate financial support to the entity. So this will come under immediate financial support and is treated as government grant. Second thing, right, the forgivable loan is recognized in SOPL. The forgivable loan is recognized in SOPL in the period in which the loan is forgiven. Now write down the journal entry. Journal entries. Date, particulars, debit, credit. The date of loan is not given, so I have written the year 2015-16. 30% of 100. 30. So loan account debit 30 to other income. Forgivable loan 30. And then 31st March 16. This will be transferred to SOPL. Okay. You could have just passed one entry also. Loan to SOPL 30-30. Done. Part 1 is over. Then what is part 2? Repayment of government grant, or what we call refund. When are we required to refund the government grant? If some conditions have not been fulfilled. As far as student is concerned, whatever may be the reason, we have to learn the accounting treatment of it. But otherwise, practically, if company fails to fulfill some conditions, then they have to refund the grant. Is it a change in accounting policy? Is it a prior period error? Or is it a change in accounting estimate? So this standard says a grant that becomes repayable shall be treated as a change in accounting estimate, which means you don't have to do retrospective adjustment. Otherwise, if it is a prior period error or if it is a change in accounting policy, you may be required to do retrospective restatement, but don't do that. Only the current year, whatever required is to be done. So now we'll see one by one. First, we will see repayment of grant relating to income. So you have to first remember what we have done originally. Bank account debit to deferred government grant account. And now we have to refund it. Check whether there is any balance lying in deferred government grant account which you have not yet amortized. If yes, first you debit this account. But if the refund or repayment is more than the balance in this account, then where will the difference be transferred to? The difference will be transferred to profit or loss statement. If there is no balance in unamortized deferred credit, then also the difference will be transferred to profit or loss. Okay. Now solve one example. Just see, is it printed there? X Limited received a revenue grant of rupees 10 crore in 2016-17 from government for welfare activities to be carried on by the company for its employees. The grant prescribed the following condition for utilization. Okay. The grant prescribed the conditions for utilization. However, during 1819, it was found that the prescribed conditions were not fulfilled and the grant should be refunded to the government. State how the matter will be dealt with in the financial statement of X Limited for the year ended 2018-19. Have they given you any figure about the grant? 10 crore. Have they mentioned what is the balance in the deferred grant account? Not mentioned. So then how do you present the answer? It means basically they are testing your knowledge on the provision of this standard. So just write the provision. The amount refundable in respect of government grant relating to revenue. Is it relating to revenue? Yes, welfare activities for employees. Shall be first applied against any unamortized deferred credit remaining in respect of the grant to the extent that the amount refundable exceeds any such deferred credit, or where no deferred credit exists, the amount is charged immediately to profit and loss statement. Therefore, the refund of grant of rupees 10 crore should be shown in the profit and loss account of the company during the financial year 2008-9. Then repayment of grant relating to asset. Again go to original accounting. What was original accounting? Either defer and then recognize it in SOPL in the ratio of depreciation, or credit the asset account, reduce the depreciation. Refund entry will accordingly be discussed. So repayment of grant relating to an asset shall be recognized by, if you had credited the deferred income, debit the deferred income, and excess refund P&L account debit. Or in case if you had credited the asset account, now at the time of refund, you will debit the asset account, increase the carrying amount of the asset. Okay. Now if you have to follow this method too, one more problem will come. First you have to provide for additional depreciation. What is additional depreciation? Depreciation that you would have charged had you not received the grant at all. Okay, minus depreciation that is actually charged so far. The difference between the two will have to be provided as additional depreciation. It means in the past you have provided less depreciation, so now the standard says you have to provide the additional depreciation, which is equal to difference between what you would have charged and what you have actually charged. And since you are going to increase the carrying amount of the asset, impairment testing will also apply, because by debiting the asset you are increasing the carrying amount. Carrying amount should not exceed the recoverable amount. So therefore, circumstances giving rise to repayment of grant related to an asset may require consideration to be given to the possible impairment of the new carrying amount of the asset. See the logic again. When you are increasing the carrying amount, it may increase the recoverable amount, and therefore you have to test it for impairment. Note down one more question on this point. During 2024, during 2024, A Limited installs a special pollution control device. A Limited installs a special pollution control device at a cost of $6 million. At a cost of $6 million. It receives grant of $4 million. It receives grant of $4 million. During 2026, during year 2026, due to non-fulfillment of the terms of the grant, due to non-fulfillment of the terms of the grant, it had to repay the grant. It had to repay the grant. it had deducted the grant from the carrying amount of the asset. It had deducted the grant from the carrying amount of the asset. It charged 10% depreciation under SLM for 2 years. It charged 10% depreciation, 10% per annum, right? 10% per annum, 10% per annum depreciation under SLM for 2 years. Show the accounting treatment of refund. Is it right? Now, if they ask you the accounting treatment of refund, so first you have to find out how much refund they will give. 4 million. This 4 million will be added to the carrying amount of the asset. Is it right? Then it will change the depreciation. And we have to also provide that additional depreciation, because when they received the grant, the carrying amount was reduced from 6 million to 6 minus 4, 2 million. So on 2 million, they have provided depreciation for 2 years, 20%. So how much is that? 0.4. 20% of 2. For 2 years, 0.4. But they would have provided 6 million into 20%, 1.2. So there is a additional depreciation of 1.2 minus 0.4, 0.8 you have to provide. Is it right? So write down calculation of carrying amount on the date of repayment. Write in detail your answer in the exam. Calculation of carrying amount on the date of repayment. Right hand side dollar in million. First write down gross amount. First start with 6. Less grant credited to asset account 4. Carrying amount 2. Less depreciation for 2 years. 2 into 10% into 2 years is 0.40. So therefore, net carrying amount at the end of year 2 is 2 minus 0.40, 1.60. Written. Then write on step number 2. Additional depreciation to be provided on refund of grant. Additional depreciation to be provided on refund of grant. Dollar in million. First point A, depreciation on $6 million. In bracket write ignoring grant. Six into 10% into 2 years. 1.20. Then point B write on depreciation actually charged. 0.40. Therefore, point C, additional depreciation 0.80. Now write down journal entries to be passed. Right hand side, debit credit, dollar in million. First write down entry for refund. First entry will be, what is the asset? Is it some kind of equipment? Right, pollution control equipment account debit 6, not 6. Grant is only 4. Pollution control equipment account debit 4 to bank account 4. To bank account 4 being refund of grant. Debited to asset account. Debited to asset account. And second entry, write SOPL account debit. Statement of profit and loss 0.80 to accumulated depreciation account 0.80. Is it right? Being additional depreciation charged. What will be the net carrying amount now in the financial statement? Net carrying amount. Below this, write note the net carrying amount of equipment will be. The net carrying amount of the equipment will be. Anybody wants to try his luck? What will be the net carrying amount? Gross amount will become 6 as usual. Okay. Less accumulated depreciation. Earlier it was 0.4 plus 0.8, 1.2. So now the revised net carrying amount will be 4.80. It is just simply take 6 minus 20% for 2-year depreciation. So you are back to the same position which you would have got had you not received the grant. Just for understanding, this treatment is not there in Ind AS 20. Why? Because Ind AS 20 does not allow to credit the grant to asset account. So therefore, at the time of refund also, there is no question of increasing the carrying amount and providing the additional depreciation. Okay. Okay, now questions will come which are printed in the notes. Check. The company received grant amounting to rupees 30 million in year 0, which is related to a depreciable asset. The company follows a policy of recognizing income out the grant account in proportion to depreciation. Which method they are following? Deferred income method. Because of its failure to adhere to the terms and condition, entire grant becomes repayable at the end of year 5 when the unamortized deferred grant is rupees 20 million. So what journal entry will you write? Complete the journal entry. You have to refund 30 million. Balance lying in this deferred government grant account is only 20 million. Show the accounting entry. Right. Deferred grant account debit 20. P&L account debit 10 for the shortfall. To bank account 30. Okay. One more question below that. RST Limited has set up a plant at a cost of 360 lakh with an expected life of 9 years. The company received a grant from state government 80 lakh which was to be utilized after fulfilling certain condition. Company treated this grant as a deferred income. The company could not fulfill the condition and the grant was to be refunded. At the time of refund, the balance in the deferred income was 72 lakh. What should be the treatment of refund of the grant? So what is the treatment they have followed in their books? Deferred income method. So write yourself what entry you have written. Deferred income account debit. How much is the deferred income account balance? 72. P&L account debit 8. To bank account 80. Is it right? Now the next is disclosures. What are the disclosures? Very simple. In the notes to account, first disclose the accounting policy adopted by the entity, then disclose method of presentation of grant. So which method you have followed for asset, because there are two options, and which method you have followed in the income statement. There also we have two methods, net amount, gross amount. Then nature and extent of government grant recognize. What is the nature and what is the amount? An indication of other forms of government assistance which the entity has directly benefited. Now the accounting treatment of deferred assistance is not there, only disclosure. Any government assistance from which you have directly benefited, disclose that. Indirect benefit assistance, do not disclose. Unfulfilled conditions. If grant are subject to condition and you have not yet fulfilled them, disclose. Any other contingencies attached to the grant, disclose. Significant decrease expected in the level of government grant. These are the disclosure requirement. Now, what is the difference between Ind AS 20 and IAS 20? Okay, first there is a very key difference here. Treatment of non-monetary grant, because this will change your SOFP total. In case of non-monetary grant, IAS 20 gives you two choices: fair value or market or nominal value. Now suppose a land is worth 10 crore rupees and it is given free of cost to an entity. That entity can follow fair value or nominal value. Nominal value means only say 100 rupees. But in Ind AS 20, you have only one option, fair value. So one company will show 100 rupees, the other will show how much? 10 crore rupees. Okay. But keep in mind this provisions of Ind AS 20 may change. So keep yourself updated on this point. And whatever method they will allow you when you go to the exam, follow that. Next is grant related to asset. Again, IAS 20 gives you two options. Either you treat grant as deferred income or you deduct it from the cost of the asset. Ind AS 20 says you treat it as deferred income. But the amendment to Ind AS 20 also allows you to credit the grant to the carrying amount of the asset. Is it right? And the third is presentation of grant related to income. This is not a very significant difference. IAS 20 requires presentation of grant relating to income in the separate income statement. In case if you are presenting two statement approach, then grant will be presented in the separate income statement. But this requirement is not there in Ind AS 20. Why? Because Ind AS 20 does not have the option of two statement approach. So this completes my standard. One or two more examples we will discuss. Okay. Now whichever questions will appear will be there in your notes somewhere. Just some more practice. On 1/6/2015, X Limited purchased an industrial land for rupees 100 lakh as per the approved scheme. Is it there? The government grants 30% subsidy. The subsidy has been received on 31st March 2016. The company follows financial year as its accounting year. Show the necessary accounting entries. Not there? Okay, then write down if you want to write. Or understand only. Only understanding is enough. What entry will you pass? You have purchased the land on 1st June. Entry for purchase of land will come on 1st of June. But the grant was received on 31st January. So this entry will pass on 31st January. And this is a grant related to depreciable asset or non-depreciable asset? Land. So this grant will be recognized in SOPL unless you have to fulfill certain conditions. In that case, the grant will be recognized over the period over which you are going to fulfill those conditions. So the entry will be land account debit to bank account 100, subsidy receivable account debit to other income government grant 30. Your grant has been approved. Then you will receive the grant, bank account debit to subsidy receivable and other income account debit to profit and loss account. Simple entries. Is it right? Or you want to try one more question? No, you try this one, which is an important question. I will tell you which question we will try. 16 number in the notes. Come to question number 16. A Limited received from the government a loan of rupees 50 lakh at 5% payable after 5 years in a bulleted payment. What is bulleted payment? All amount will be paid at the end of the year. That is 5th year. I had given you similar example, but there we are making payment in installment. Then the market rate of interest is 12%. Interest is payable regularly at the end of each year. Calculate the amount of government grant and pass the journal entry. Examine how the government grant will be realized. Okay. So in this example, first we'll have to find out the fair value of the loan. Your institute has given you the direct answer. Fair value of the loan is calculated as follows. They have given you some number 37, 38, 328, but they have not given the working of that. You will have to calculate. So write down in your notebook somewhere fair value of the loan, year, cash flows, present value, factor at the rate of market rate 12%. Because the students have asked me this question, how this number has come. So this number we have to arrive at. What is the interest you are going to pay to the government every year? 50 lakh into 5%. for 5 years. 50 lakh into 5%, 2,50,000. And in the 5th year, you are going to repay the entire amount of the loan. So this would be your cash flow for the next 5 years. Now take your calculator, find out the annuity factor for 1 to 5. 1 divided by 1.12 equal to 5 times, then press GT function. You will get some factor. Anybody? 6047. And only 5th year factor 5674. No, let's try again. 5674. Okay, seems to be right. Try, multiply 2,50,000 into 3.6047. 9,01,194. Very good. And multiply this also. 23 lakh or 24 lakh. No, try yourself. 28 lakh. 37,130. Take total now. 320. This is the amount that is appearing. This is the fair value of loan. Therefore, grant will be equal to 50 lakh minus 37, 38, 328. 1261, 672. Step 3, journal entry. Bank account debit. How much amount you will receive? 50 lakh. To loan account, the fair value only. This is your actually what you have received as a loan. 37, 38, 328. And the remaining amount is your government grant, deferred income. 1261, 672. In your book, there is a table drawn which is actually not required. There is a table, you can take a pencil and cancel it. Okay. And now there is a question, how the government grant will be realized. So there is a note which you can just underline there. Rupees 12,61,672 is to be recognized in profit or loss on a systematic basis over the period in which A Limited recognizes as expense the related cost for which the grant is intended to compensate. And question number 17, which is a continuation of 16, let us quickly discuss that also. Continuing with the facts given in the above question, 17 number, state how the grant will be recognized in the SOPL, assuming, you have to answer fast, the loan is an immediate relief measure to rescue the enterprise. Then this entire 1261,672 will be recognized in SOPL. Printed below, don't write. The loan is a subsidy for staff training expense incurred equally for a period of 4 years. So this loan will also be apportioned over 4-year period in equal installment. The loan is to finance a depreciable asset in the proportion of depreciation, okay, over the useful life of the asset. Okay, now one more similar question is there which also we will rectify. Come to 19 number. 19 number quickly. 19 number. There also they have drawn one table which is actually not required. A Limited received a government loan of rupees 1 crore at 5%, payable after 5 years in a bulleted payment. Market rate of interest is 12%. Interest is payable regularly calculate the government grant, pass necessary entry, examine how the grant will be realized, also state how the grant will be recognized in the statement of profit or loss, assuming that the grant is to finance a depreciable asset that we have discussed. My only intention is that you must know how to get this figure right. Year cash flow, present value factor, present value. Same problem, only I think figures are different. 1 dash 5. 1 crore into 5%, 5 lakh. Fifth year, 1 crore. Present value factor we had calculated in the previous problem at 12%. Can you give me the same figure again? 3.6047, 0.5674. Multiply this into this. 18 lakh 2000. 388. Wonderful. This one. 567400. Or one more zero, I think. 260. Okay, no problem. Take total. 656, which is printed in your note. Remaining discussion is same, but the institute calculation is not given for this number. They have given some calculation which is not required. Only this much was enough. The table you can delete. Okay, this answer is over, and this chapter is over. Solve the remaining questions yourself. You'll be able to solve. They are very easy.